Welcome to Candlelight, where price is a mechanical function. In this video, I'm going to be going over how to short cryptocurrencies, specifically when and where to short Bitcoin. Now, most of the professionals shorted Bitcoin at about $60,000 or $60,000, but most people don't know how to trade short gaps or don't know how to go long or short or trade gaps. So most people haven't been able to catch the short, but just last week, a trading opportunity has just been developed. And I want to go over what that looks like and when and where price should be doing certain things. Now, I want to make this abundantly clear from the get-go. This is not any kind of legal or trading or investing advice. This is just a fantastic opportunity to show people what price should be doing at a certain time and at a certain place. So let's get into it. Now, this is a chart of Bitcoin. This is a monthly chart where every candlestick represents 1 month. Anytime you have ballistic movement like this, it's unsustainable, both in population or let's just say an explosion. Acceleration like this in the universe, it doesn't matter what it is, price, population, heat, it doesn't matter. That's unsustainable. So anything that grows this quickly or rallies this quickly falls just the same way. Both supply and demand exist at the origin of moves. So to the upside, the origin of this move was down here at about, let's just say 15,000. That's where demand exists. Price still has a way to go because all this is a pocket of air. So let's minimize that. This is what it looks like on a weekly. Every candlestick represents 1 week. This left-hand chart is a daily where every candlestick represents 1 day. This is a 240 minute where that's 4 hours. Every candlestick represents 4 hours, and this is a 60 minute. Now, let me delete this real fast. So anytime you have a high, a low, a lower high, and then as soon as it breaks this current low, it's going to give you a lower low, you have a downtrend. This is the overall trend. And anytime you have a trend and price stays on the left-hand side of your trend line, both to the upside and to the downside, price is respecting the trend. So right now we're in a downtrend. If and when price breaks above this trend, then you can start focusing on, in this case, going long because we're in a downtrend. So if price breaks above that downtrend, the downtrend's over and we start focusing on going long. But for now, we should be focusing on shorting. And just this past week, this supply zone on about 40,000 just gave us let's just say, here you have a high, you have a swing low, so a lower swing high, and then it broke this low, so it gave you a lower swing low. And it has ballistic movement down. That's a good supply zone. That's the origin of a large move, and price is continuing the downtrend. So anytime you want to short, you want to sell high and buy low. So before we get into that, I want to show you a mirror image of what we are looking for. But we have 2 spectacular opportunities to the upside. So I want to show you the mirror image of what we should be looking for to the downside, except to the upside, which is right here and right here. Whenever price was rallying to the upside, you had an uptrend. And when you're in an uptrend, you want to buy low and sell high, then buy low, sell high, and so on and so forth. So let's go over the exact same, or let's go over the first scenario of what that looks like to the upside. Here you have a rally, base, rally. That's a demand zone. You have tight basing and then ballistic movement out. The only thing that can give you ballistic movement is a lot of demand. A lot of demand makes price move quickly out of an area, and because it moves quickly, that's where it tells you, or that's where price tells you where demand is. Supply and demand tells you where price should be doing certain things. If it moved ballistically in that area, if price moves down into that area, let's just say to the upside, if price moves down into that area, that's where demand exists. Price should hold at that point because demand exists there. The when you should do something is given to you by trend lines, and this is what it looks like. So you're in an uptrend, but you want to buy low. So you are given a demand zone, and then you want to wait for price to enter that zone. For price to come back down, it must go into a downtrend or a intermediate term downtrend. You're giving your high, your low that broke several demand zones along the way, and then give you a lower swing high and then a lower swing low. Because price is on the left-hand side of your intermediate downtrend, you do not want to go long yet. Your demand zone is holding, which is what you want to see. The location is good. It's holding at this location. But you do not want to go long. You want to go long once price breaks above your trend line. At that point in time, because trend lines tell you the time frame or the time aspect of trading, once price breaks above your trend line, then at that time you can focus on going long. Demand zones. The demand zone that broke this trend line is right here, and here you have ballistic movement to the upside. Fantastic demand zone. So you draw your demand zone right there. Once price comes back into demand, then you buy. And every trade that you take, you risk 1% of your portfolio to make hopefully at least 3 times as much, minimum. So you risk 1% of your portfolio, and because you're in an overall daily uptrend, you're expecting price to break the swing high and continue the trend. So you're going to buy low and expect price to really rally. If you've risked 1% of your portfolio, then at this point, you're easily up 20, 30, let's just say 30 to 1. 30% is definitely not bad in, let's just say, a month's time. That's not bad. So in an uptrend, you expect prices to make higher swing highs, and it does, and then you sell high, and you want to buy again in demand zones. At this point, now you have a low, high, lower swing low, higher swing high, and I went over this in my last video on how to go long. You have an uptrend, and you want to go long another demand zone. You have a rally base rally, there's demand, and the exact same scenario. Here's your demand zone. You want price to come back down, so you have a downtrend. You want price to hold in demand, that's the location, but you don't want to go long until the time is correct. And the time tells you when, or the time is told to you or given to you whenever price breaks above this trend line. Once it does, this is the rally base rally that broke your trend line, and it's also the origin of this swing low that broke above this swing high. So now you have a low, high, and you want to catch the higher swing low to hopefully make a higher swing high. And sure enough, price comes down into the demand zone that broke your trend line. You go long here and you sell high. And then after you get in long here and here, you want to sell for profit on your overall uptrend, because overall this uptrend is now dead as soon as price breaks this trend line. And I went over that in the last video. So now, because hindsight's 20/20, and it's really easy to say, oh yeah, back in the past you should have done this, you should have done that. Let's go over what price is doing right now and what should be happening in the future. So let's actually make predictions now. So the exact same scenario is happening now. You're now in an overall downtrend. You want to short supply zones. Just like you had a ballistic rally base rally or rally base rally, those are origins of large moves. Where do you have those on supply? Here you have it right here. Let's just be really safe and say here. And right here, you have an origin of a large move, and then you have the origin of this ballistic large move here. You're on the left-hand side of your downtrend, so you're good, and you want to be focusing on going short. So what you want to be seeing is any kind of rally into this supply zone, which on a 240 would be right here. This is what looks like or is being shown on a daily, except on a 240 minute. So this is the origin of ballistic movement to the downside, and you want price to rally into that supply zone for it to fall and make another lower swing low, which means breaking this swing low and continuing the downtrend. So just like you had this intermediate short-term downtrend into demand, you want to have an intermediate uptrend into supply. Now right here, this was your swing low. Right here, swing low. Right there, you had a small, shallow uptrend that also got broken. And on top of that, this was right here, this intermediate uptrend that got broken. And once again, not only is this the supply zone that broke this intermediate uptrend, which is this rally right here, it also is the origin of a large, strong move, ballistic move to the downside that made a swing low. So what you want to be seeing is for price to start to rally up into supply. And let's just say that this is the swing low, swing high, and price, let's just say on Monday, starts to rally at this point, breaks this swing high, you'll start to have an uptrend that'll take price into supply. When it does, you want to expect and see price hold at this level and then break this uptrending trend line, this intermediate uptrending trend line, and then short whatever supply zone breaks that trend line. And then at that point in time, held by that supply zone, which is that point in space or location, follow through with making a lower swing low on your daily chart and continue coming down probably to about 15 or 20,000. So this is not financial advice, but this is a fantastic opportunity to see in live prediction. Let's not just talk about the past, but let's make predictions. What price should be doing, when, and where. So I hope this was helpful. I'll talk to you guys on the next one. Take it easy.